Three, two, one, go! Hey everyone, welcome back to the podcast. We've got an exciting discussion lined up. We'll be diving into a remarkable speech from Federal Reserve Governor Christopher Waller. Governor Waller, who's been a member of the Fed's Board of Governors since 2020, has played a crucial role in the Fed's efforts to control inflation, promote full employment, and ensure macroeconomic stability, especially in the aftermath of the COVID-19 pandemic. In our next episode, we'll shift gears and explore a speech by Isabel Schnabel, a member of the Executive Board of the European Central Bank. She's been discussing the euro area inflation outlook, and her approach to scenario analysis is really aligned with the framework we use in the Global Forecasting School, specifically FPAS Mark II. It'll be fascinating to break that down and see how it all fits together. As always, here at the Global Forecasting School and with the Better Policy Project, our goal is to improve economic and financial literacy, and we're doing that through videos and podcasts like this one. For those of you who've been supporting the channel by subscribing, liking, and replying to our videos, we truly appreciate your support. And if you're new here, we'd love for you to join us on this journey. We saw the release of the US Employment Situation Report, and in addition, we were treated to a fantastic speech by Federal Reserve Governor Christopher Waller at Notre Dame University. My name is Anahit, and I'm a student at the Global Forecasting School. I'm excited to break down this speech for you, as it's full of valuable insights for anyone interested in monetary policy, the labor market, and the overall economic outlook. Governor Waller's speech offers rich lessons for those of us who are recent graduates or students trying to understand central banking and economic policy. In today's episode, we'll dive deep into his remarks, covering key points about the US economy, inflation, and the future of monetary policy. Let's get started. Governor Waller was introduced by Professor Eric Sims, the chair of Notre Dame's Department of Economics. In the introduction, Professor Sims highlighted Waller's long and impressive career, noting his time as a professor at Notre Dame and his current role as a member of the Federal Reserve Board of Governors. Waller has been a key figure in shaping the Fed's response to the COVID-19 pandemic, and today he remains a central player in guiding U.S. monetary policy. When Governor Waller took the stage, he began with some light-hearted remarks about returning to Notre Dame and his fond memories of being part of the faculty. He joked that he needed to wake up the class and energize the room by cheering on the Notre Dame Fighting Irish. After his opening, he quickly transitioned to the main topic of his speech, the U.S. economic outlook and monetary policy. He noted that this topic was particularly relevant because the U.S. Employment Situation Report had just been released earlier that morning. In the next section of his speech, Governor Waller discussed the state of the U.S. economy. He pointed out that the labor market had been gradually cooling over the past year, but it was not showing signs of significant weakness. Waller emphasized that while job creation had slowed, the overall economy was still growing at a solid pace. According to the most recent jobs report, the unemployment rate had risen slightly to 4.2%, but Waller urged caution about overreacting to this one data point. He explained that the Federal Reserve must be data-dependent, but also avoid making hasty decisions based on short-term fluctuations in the data. Waller stated that the labor market was softening, but that this was consistent with moderate economic growth. He believed the U.S. economy was not headed for a recession and that job creation was likely to continue in the coming months. He highlighted that the balance of risks had shifted toward the employment side of the Federal Reserve's dual mandate. Now that inflation was nearing the Fed's 2% target, more attention would need to be focused on supporting employment. Governor Waller then moved on to discuss inflation, which has been a top concern for the Federal Reserve over the past 2 years. He pointed out that inflation had come down from its highs and was now close to the Fed's 2% target. The key measure, the Personal Consumption Expenditures (PCE) price index, had increased at a moderate pace, and core inflation was running at about 2.7%. Waller noted that these numbers were encouraging and suggested that the Federal Reserve's restrictive monetary policy had been successful in curbing inflation. With inflation moving in the right direction, Waller believed that the time had come for the Fed to begin reducing interest rates. He referenced the Taylor Rule, a widely used guideline for setting interest rates, which indicated that a rate cut was appropriate given the current economic data. Waller also mentioned that he expected this to be the first in a series of rate cuts, as the Federal Reserve aimed to support economic growth while keeping inflation in check. Governor Waller then discussed the role of data in shaping monetary policy. He emphasized that while the Federal Reserve must rely on data to make decisions, it's important not to overreact to any single data point. Waller recounted how in 2021, the Fed had anticipated that inflation would be transitory. At that time, policymakers were confident that inflation would come down on its own. However, the data later showed that inflation was more persistent than expected. This experience, Waller said, highlights the importance of being flexible and adjusting policy as new information becomes available. Policymakers must be nimble and ready to change course when the data suggests that conditions have shifted. He explained that the Federal Reserve would carefully assess all the economic data leading up to the next Federal Open Market Committee (FOMC) meeting before deciding on the appropriate course of action. Following the speech, Governor Waller took questions from the audience which provided additional insights into his thinking on various economic issues. One question asked about the role of wage inflation in driving overall inflation. Waller responded by explaining that wages typically rise in response to inflation rather than causing it. However, during the pandemic, wages in certain sectors had surged, which did contribute to inflationary pressures, particularly in the service industry. Another question focused on the role of government spending in contributing to inflation. While Waller did not comment directly on fiscal policy, he emphasized that the Federal Reserve's job is to respond to the economic conditions that fiscal policy creates, not to evaluate or judge those policies. There was also a question about global risks, such as geopolitical events, and how they impact U.S. monetary policy. Waller explained that while the Fed monitors global risks, it only reacts to those that directly affect U.S. inflation, output, or employment. To wrap up, Governor Waller's speech provided a comprehensive look at the current state of the U.S. economy and the challenges that the Federal Reserve faces in balancing its dual mandate of controlling inflation and supporting full employment. His emphasis on data-driven decision-making and his cautious approach to rate cuts highlight the complexity of central banking. Thank you all for tuning into this episode. I hope you found Governor Waller's insights as valuable as I did. If you're studying economics or policy, I encourage you to pay close attention to speeches like this. They offer real-world lessons in how economic theory and policy intersect. I'm Anahit, and I look forward to sharing more insights with you in our next episode. Until then, take care.